The AI market is worth $514 billion right now. By 2029, it crosses $1 trillion. By 2033, it hits $3.5 trillion. That is a 7 times increase in 7 years. And companies are already spending $527 billion on AI infrastructure this year alone. The question is not whether AI will grow. The question is, are you positioned to profit from it? Quick note before we start. This video is for educational purposes only. Nothing here is financial advice. Always do your own research. AI has existed since 2018, but 2026 is where the real money starts moving. Corporate AI investment hit $581 billion in 2025. That is a 130% increase in a single year. Hyperscalers, Google, Microsoft, Amazon, Meta, are spending $527 billion on AI infrastructure in 2026 alone. 88% of businesses now use artificial intelligence, up from 55% just 2 years ago. This is not hype anymore. This is the largest capital deployment in corporate history. Most people trying to invest in AI make the same mistake. They buy one stock and one stock can destroy you. Nvidia fell 17% in a single day. On January 27, 2025, one bad earnings report, down 40% overnight. One CEO leaves, the stock crashes. An AI ETF solves this. Instead of one company, you own 42-80 AI companies at once. If one crashes, the others carry you. Professional rebalancing, automatic. One by the entire AI sector. Chat ETF, which holds Nvidia plus 41 other companies, fell just 8% that same day. Nvidia dropped 17%. ETFs do not guarantee profit, but they spread the risk across the whole sector. Number 1, we have the ETF named Chat, the world's first ETF in generative artificial intelligence. In 2024, it returned 31%. The Nasdaq returned 22%. In 2025, Chat returned 49%. The Nasdaq returned 21%. Year to date in 2026, it is already up 41%. The Nasdaq is up 14%. Here you see the clear difference. $1.86 billion in assets, actively managed. A team of analysts picks the winners daily. Top positions inside Chat. Nvidia at 8%, Microsoft at 7%, Google at 7%, Adobe at 6%, Meta at 5%. This is the ETF for investors who want pure concentrated exposure to generative AI. Number 2, ticker BOTZ, the second ETF for the global robotics and AI. Launched in 2016, the oldest AI ETF in existence. $3.82 billion in assets. The biggest of the three. BOTZ covers 4 categories: industrial robots, factory automation, and manufacturing. Healthcare robots, intuitive surgical, and surgical AI. AI software companies building the platforms. AI infrastructure, chips, sensors, and autonomous systems. The biggest names inside: Nvidia at 14%, Intuitive Surgical at 10%, ABV at 8%, Keyence at 7%, Fanuc at 6%, and 4 European investors. BOTZ has a UCITS version available on the London Stock Exchange at a 0.5% expense ratio. Number 3, buy BlackRock's actively managed AI ETF. BlackRock manages $10 trillion in assets worldwide, the same firm that launched Conte for Quantum. If you watched video 1, what makes BUY different from the others? BlackRock's team of analysts picks the winners actively every day. Global exposure: US, European, and Asian AI companies. It includes AI in defense and aerospace, not just big tech. Focus on innovation. The company's building what's next. Expense ratio 0.65%. Higher than passive because you are paying for active management. Let me put all 3 side by side. Enjoy the jazz and see for yourself. If you watched the last video about quantum, here's the honest answer about the two. AI is generating real revenue right now. 88% of businesses already use it. Lower risk proven technology, but some of the upside may already be priced in. Quantum is still early stage. Higher risk: the technology is not yet fully commercial, but the upside potential is massive, and less competition means more room to grow. The smart investor owns both. Here is exactly how to buy these ETFs. Step 1. Open a free broker account. DEGIRO Scalable Capital, all free and takes 10 minutes. Step 2. Search for the ticker symbol. Chat for Roundhill, BOTZ for Global X, BAI for BlackRock iShares. Step 3. Buy your first position. Even €50 is enough to start. No minimum required anywhere. Step 4. Set a monthly auto invest. Set it and forget it. Let compound interest work silently in the background. Not financial advice. Always do your own research. If this video helped you understand something most people have no idea about, subscribe to The Quiet Investor, where smart money is quietly moving. Subscribe so you do not miss it.